and welcome to Energy Insights, your source for the latest updates from the global energy markets. Today we break down the key development in the energy sector across the globe, covering market movements, company stock values, and geopolitical events impacting energy flows worldwide. We will cover all these four segments respectively. So starting from the segment 1, let's dive into our segment 1, which is covering the OPEC plus agrees to boost oil output when Strait of Hormuz reopens. So OPEC plus has agreed to increase oil production once the Strait of Hormuz reopens, signaling a strategic response to recent supply disruptions in the Persian Gulf. This move comes amid escalating regional tensions that temporarily constrained exports from the key producers in the Middle East. The decision aims to stabilize global oil markets, ensuring that flows meet demand without triggering a sustained price spike. While production increases will be gradual, OPEC Plus intends to balance the geopolitical risk with the global consumption requirements, providing reassurance to refiners and energy consumers awaiting normalized shipping lanes. In our segment 2, we are covering the Taiwan secures LNG supply assurances. So Taiwan has confirmed a reliable LNG supply from major trading partner, easing concerns about the potential fuel shortages during peak winter demand. The government highlighted that the long-term contracts and diversified sourcing will safeguard the energy security of the country. Analysts note that this reduces Taiwan's reliance on the spot markets and strengthens its negotiating position in the regional LNG markets, especially as Asian LNG prices remain sensitive to global supply disruptions. In our segment 3, we are looking to the commodity price movements of today's. The oil, gas, and the LNG particularly. So energy commodities are showing significant volatility today, reflecting both the geopolitical developments and supply-demand dynamics. In case of the oil prices, the reference West Texas WTI crude recorded the price $111.54, which is an increase of 11.41% in comparison of yesterday price. Similarly, the Brent crude today price remained $109.03, which also show an upward tick with a 7.78% in comparison of yesterday price. In case of OPEC basket, the price remained per barrel $110.63, which on the downside in comparison of yesterday price. So the noted price average remained 10.21% decrease in comparison of the previous session. In case of the refined products, the gasoline price remained $3.29 per gallon, with the recorded increase of 6.36%. Similarly, the heating oil price remained $4.36, which also shows an upward movement of 7.5%. The surge in WTI and the Brent reflects market concerns over supply constraints, while the OPEC basket's decline reflects Brent variations and timing of official reporting. In case of the natural gas prices, the Henry Hub price remained $2.80 per MMBTU, which shows a negative movement on the lower side with a decrease of 0.67%. In case of LNG prices, the Japan Courier marker JKM price remained $19.83 per MMBTU, which had recorded a decrease of 1.49% in comparison of yesterday price. Similarly, the Dutch TTF price remained $16.22, which also recorded a negative movement of 11.37%. The LNG market shows some stabilization as long-term contracts and regional assurances such as Taiwan's LNG deal temper the price volatility. So from the segment 2, now we are shifting to segment 4, which the energy company stock movements, particularly the oil, gas, LNG and power entities. In case of the global energy equities, shows selective moment, closely tracking commodity price trend. In case of the island integrated energy companies, the ExxonMobil price remained the stock price remained $160.69, with a recorded increase of 0.45%. Similarly, Chevron price remained on the New York Stock Exchange $168.23, with an upward moment of 0.3%, which is a slightly change, very slightly change. So in case of the Shell, the price remain €22 and 47 cent, with an upward moment of 1.2%. Similarly, the British Petroleum price remain £6 and 52 cent, with a downside moment of 0.15%. Similar Total Energies stock price remain €53 and 87 cent, with the upward moment of 0.2%. In case of natural gas companies, the Chesapeake Energy stock price remained $34 and 88 cent, with a down moment of 0.25%. Similarly, the Equity Corp price remains $61 and 12 cent, with a negative moment in comparison of yesterday 0.18%. Similarly, the Kinder Morgan price KMI remained $21 and 34 cent, with a negative moment of 0.05%. Similarly, LNG sector, the Cheniere Energy price stock price remained $108 and 27 cent, with a negative moment of 0.4%. Similarly, the Petronas LNG price stock price remained 280 ringgit, and the Woodside Energy price remained Australian dollar $32 and 45 cent, with a negative moment of 0.20. In case of power utilities, the stock prices, the Nextra Energy price recorded price, the stock price remained $85.07, with an upward moment of 0.1%. Similarly, Enel price remained €7 and 92 cent, with a negative moment of 0.05%. So Dominion Energy stock price remains $74 and 33 cent. Day and day insights related. So oil stocks is slightly higher with WTI and Brent support. Similarly, the gas and LNG equities are slightly weaker, tracking Henry Hub, JKM and TTF trends. And power and utility stocks remain mostly flat, reflecting their regulated and stable earning profits. So overall market takeaway that in case of commodities, the prices remain highly sensitive to geopolitical events and supply disruption. In case of the equities, investors differentiate between the commodity exposed stocks and regulated utilities, resulting in selective moments. In energy security case, Taiwan LNG supply assurance and the OPEC Plus output plan are key stabilizing signals. So the overall summary is that the energy markets are reacting sharply to geopolitical and supply developments. LNG prices show model easing, and the energy stocks reflect a measured response to underlying fundamentals. The current environment underscores the interplay between the commodity volatility and equity market stability across oil, gas, LNG, and power markets. So let's wrap up today's global energy market update and the energy insights. Thank you for watching.